Oh crap, people in the waiting room. View. That's John and Livy. Hey y'all, hey.
Hey, girl.
Hello.
Welcome.
Hey John, hey Livy. We're about to go ahead and get started. I'm trying to stream live, but I don't know if I'm doing it right. Ain't gonna worry about it.
Mm-hmm.
Okay. It says it's streaming, so I'm gonna go ahead and get started. So we got an hour, which we have long, but I don't want to be. So let's go ahead and get to our disclaimer. Just a second here. Hit it up. Here we go. Okay, let me switch share. Um, honey, share sound. There we go. Where's my little? Here we go. Here we go, y'all. Play.
Yeah, some
Disclaimer. The information shared during Legacy Lounge Live is for general, educational, and entertainment purposes only. It should not be taken as legal, financial, or professional advice. Please consult a qualified professional for guidance specific to your situation.
Welcome to the Legacy Lounge Live, where wealth meets wisdom and every conversation builds a legacy. All right.
Disclaimer. Shared during Legacy Lounge Live is for general, educational, and entertainment purposes.
All right. So that's our disclaimer. Welcome to Legacy Lounge Live, everyone. We're talking about the big thing, the 50-year mortgage debate. We have our wonderful guest speaker here, Mike Mendiola. I know everybody's been anticipating this, so we're so happy that you're here. So we're going to go.
Nice to be here.
We're going to go right on and dive in tonight. So I want to start off fun with a few little icebreakers in a game called This or That. So anybody in the chat is more than welcome to join in. In fact, I prefer it. If you're live, please join in live as well, or you can take yourself off mute and let us know what you think about those as well. I want to hear from you. So let me see. Let's see. So our first icebreaker for my panelists, as well as everybody in the audience here, if 2025 were a movie, what would the title be and why? So this can be a movie that you've created, or this can be a movie that's already been created.
Reed, you got one? Well, I got one. Mine would be Don't Blink. I believe that this year has gone by so quickly. I know that, with me expecting, if those of you who are on the line don't know already, I am expecting and it's coming up this February. I mean, because where did 20, 30 weeks go? I don't know. I don't know where it went. And I'm excited for this year or how it's turned out, but I would definitely say don't blink because that's how quickly it goes. That's how life could pass on you. Yeah.
I love that. I love that.
Yeah, for me, I would have to say the good, the bad, and the ugly.
Oh, I like
Right?
that.
So, yeah, there's a lot of good in there. There's some ugly in there. But, we're going into a new year. There's a lot of good stuff that we're going to see, coming up here in 2026. But yeah, if I had to sum it up, it's definitely a year of adaptability.
Yeah.
So,
I agree with that one too.
For me, I'd say the emotional roller coaster. Kind of along those same lines y'all were saying, but it seems this year every time we've gotten good news or bad news, wait a week and something's changed. So
Mhm.
it's just been a lot of ups and a lot of downs.
Well, that should be the name of yours. A lot of ups, a lot of
That's a lot
downs.
of.
The name of mine would be What in the Administration?
Come on. Come on. I like that. What in the administration? That
Yes.
can be applied towards so many different professions, though. What in the
Mhm.
administration?
What's going on?
Absolutely. Headlines every day, right?
Right.
All right. So right now, for the people that just came in, thank you so much for being here. First and foremost, welcome to the Legacy Lounge. So we're starting our icebreaker questions. My question was, if 2025 were a movie, what would be the title and why? So you can make up your own movie, or if it's a movie that already has been invented. So we're just having a little fun diving into those type of ideas. So I think everybody kind of touched on that for a bit. All right. So the next one is, if 2026 had a trailer, what would the title be and why? And everyone that's on live, you're more than welcome to type in the chat or take yourself off mute and let's hear from you. I'm curious.
I mean, my trailer would kind of be the same thing. Don't blink or you'll miss it. You know,
What y'all
I
say?
think I don't know. I think that a lot of what we all said, you know, the good, the bad, the ugly, the ups and the downs, I think we've all definitely had that in 2025. It's been one of those years, especially in the professions that we're all in. However, I mean, that trailer, I like what Reed say, you know, that roller coaster. It is 2025 is a roller coaster.
Sure is. It sure
Yeah.
is.
It's like those old trailers back in the day, right? Where it had the deep voice, the guy talking at the very beginning, right?
Yes.
It's like in a world, right?
Come on.
So
That's right.
In a
That's
world filled with mortgages, high mortgages, high rate mortgages, and no money, and broke people.
sure. Buyers on the sidelines.
yes,
Fires on the sidelines. Come on.
exactly. And then
It's
just
okay, y'all. We all on that. We all on that train. We,
yes,
we ain't gonna be broke forever.
No, not at all.
we rebuke that.
Right.
It says, forget what you thought would be his trailer.
Forget what you thought. I like that.
I'm on mute. But thank you guys so much for being here. I really appreciate every last one of you guys, and we're getting some good stuff on here. So the next icebreaker question is, what is your go-to comfort food or snack?
Ice cream all
Sour
day
Power
long.
straws.
What you say?
Sour Power straws.
Oh, you took it back.
Is it
Mhm.
the sour punch straws or the power? Is there
So
a difference?
Houston seems to have sour punch, but in New York we had a lot of sour powers, so I settled with the sour punch in Houston.
Okay.
Okay.
Yeah. And that's
If
the way it's on the packaging. I was like, sour power. I don't think I've had one of those. But yeah, okay.
if we're taking it back, I'm gonna say now or laters.
All right now, later.
Yeah,
Yeah.
I'm a peanut butter cup guy myself.
Oh, I
So
like those.
You never go wrong with Reese's cup.
Go wrong with it.
Come on, Reed. What's your comfort food?
I like peanut butter because I usually get mixed reactions when I say this, but I could go to town just with a spoon on a jar of peanut butter, like just straight
Yeah.
up. Some
I
people
do
think
that
that's
almost
weird.
every day. I stick my spoon in there and just eat the peanut
Yeah.
There you
butter.
go.
You know,
There you go.
You see, y'all would have to put a label on y'all peanut butter because if I come to your house trying to make myself a PB&J and your spoon been double dipping, we're gonna have a problem. But yes, I'm not opposed to dipping the spoon in the jar. I'm OCD with
see,
the
I'm
double dip.
safe. That nobody else in this household likes peanut butter, so I'm the only
There
one. So
There you go.
it's a safe
you
bet.
go.
For sure.
Now that Reed mentioned the jar, I guess I have to just come clean. But my comfort food is definitely jalapenos in a jar. I eat them straight
Oh,
out.
Uh-uh.
yeah.
Straight out. Like I would
Oh,
finish a whole jar in a day or two. So yeah.
I'm with it. I'm not mad at the jalapeno. I used to suck on packets of Tabasco sauce from Taco Bell. It always had to be the hot one. And that was when I was younger. And then somebody told me something about hemorrhoids, so that scared me off of it, and I ain't done it since. But yeah, I didn't know what it was when I was younger. But yeah, you could just catch me any given day walking around the house with a packet of hot sauce from Taco Bell in my mouth.
Mm,
So I get that.
okay.
I would have to be some gumbo or some good pecan candy.
Come
Come on
on.
with
You
it.
can't go wrong
Come
with
on,
that.
John.
No.
Ooh, that's so you know you from down south. That good gumbo. Come on now. When
That's
you putting the pot on, let me know.
mm-hmm. All right. All right. If no one else, so the last one for the icebreaker chat before we get into this or that rapid fire is if you could teleport anywhere for 1 hour, where are we going?
I'm going to the beach. Just want to sit on the beach.
Yes.
Yeah.
That speaks to
Fresh
your movie
air.
trailer. You need a break.
Yeah, right. Just that's a
Only
happy
for one
place.
hour, right? Only
Yep.
for one
Mhm.
hour. I would have to say heaven, but only for 1 hour, God, not now, but I would
Come
have to
on.
say
Come
heaven.
on. She said, I just need a sneak peek. Mhm. That's good. Mine would be in this current state of mind. I just want my bed. Just go to that bed for 1 hour. Let me teleport. Any given day, any given hour, let me know.
That's
That's the
right.
mindset I'm in right now. Sleep.
Yes, I understand it. John say wherever Beyonce is.
Oh.
All right.
Okay. Okay.
I don't know why the first thought that came to my mind was Mexico. And my only reasoning behind this is just some place that like it's not 30 degrees 1 minute and then 70 a few hours later. Because we've been dealing with that a lot lately.
I know.
Mhm.
Yeah.
Get out of here.
This bipolar weather. Don't
Yeah.
know how to dress.
Right. Right. You don't know what to wear. All right, child. Those are some good ones. I
It
love it. I
was
love
good.
active. Thank y'all so much. So we're about to hop into this or that. So we're going to use a lot of the chat. You can also get off mute and say it aloud if you're listening. Love to hear from you. So this or that. So I'm going to give you like this or that, and you see which one you identify with more. So cocoa, coffee, or tea? Hot cocoa, coffee,
Coffee.
this or that.
Coffee.
Tea.
As of right now, I'm saying cocoa. All right, so we got one coffee. All right. All right, next. Are you a planner or go with the flow? I'm go with the flow.
Planner.
Yeah. I'm a
I would
planner.
Planner.
I would hope I'm a planner.
Yeah. I have to plan everything out
Yeah.
before I actually react to it.
And let's just, it depends on what it is. If it's work related, then yeah, I can be kind of
Yeah.
like, if it's just, I'm just talking about just in general. Yeah.
Oh, if it's just, outside of work out,
Yeah,
yeah.
outside
It's
of
like
work.
whatever. Like we'll do whatever. It's like I don't have to think
I'm
about it.
still.
Let's just go. I'm
Yeah,
good.
Mm-hmm.
You know?
that type of thing.
Mm-hmm.
I would have to say, so for work, definitely want to make sure it's planned out. I'm way more organized with work more than I am personally. Um, but I'm gonna go with the flow type of person. Until I started hanging with Nicolette, we actually plan our girls' nights. I'm not
Yeah,
used to that. That's pretty cool.
I love it. So are you early nights or late nights?
Late nights.
Late nights.
It depends.
No,
Yeah.
you grandma. You go to bed. She grandma. Don't let her fool y'all. She goes to bed
I don't
to
know. I
catch
mean,
up.
the last couple of years, I'm in bed by 10. So
See?
it's definitely the older you get, the earlier that bed gets, right?
For sure.
Mm-hmm.
For sure. Okay. Vision board or written goals? Like, are you a journaler or you like to do your vision board?
Written. I love to write.
Yeah.
A little bit of both.
Okay.
Yeah, I write down everything. Everything's just
Yeah.
is all notes and
Okay.
goals.
We got two more. And read my side eye, some of y'all on this one. Save or invest? Are you
I'm
saving?
gonna I'm gonna
Can we say we got a problem with both?
I'm gonna stay out of this one.
I read.
I'm gonna say both. It's really important to save, especially for emergency fund, but I'm really big on investing. So a portion of my pay goes right to stocks or my REITs. So yeah, both.
Nice.
Okay. And last but not least, would you rather buy experiences or buy things?
Experiences,
Experience.
heavy on the experience.
Experiences.
Always.
100%. Yep.
All right, perfect.
Good. Unanimous on that last one. That was good.
I love it. I love it. So before we jump into the highlights of the people of the night, I just want to do a quick acknowledgement because this is the holiday season and everybody's with their loved ones and all those things. But there are some people that people have deaths in the family, or they're not as close with their family, or different things have happened. And I just want to let you know that us of the Legacy Lounge are here for you and be a part of your extended family or anything you need. So if you need a virtual hug or anything like that, we are here for you. And just know that you are heard, we are here for you, and we celebrate you in general. All right. So our first spotlight is going to be our very own Nicolette Nimdali. She is our life insurance person as well as one of my beloved co-hosts. She is doing something with her business today, so she's not on tonight. However, I did have the opportunity to have her pre-recorded, so I am going to share my screen so we can see what she had to say about tonight for her spotlight. Give me 1 second. Share sound. All right, y'all. Let's see, Miss Nicolette. So I asked her some of the icebreaker questions. So I'm just going to go over, it's only 4 minutes on this one. So I'm going to go over what she had to say for her icebreakers. Nicolette, we have a few icebreaker questions. So if 25 were a movie, what would be the title and why? And it can be a movie that's already out, or it can be a movie that you created.
I would probably still be in the process of creating that movie. 2025 not over, and I'm having, and this month would not be included. But if 2025 was a movie, the first movie that comes to mind for me is The Matrix. And I say The Matrix because they're jumping in and out of portals, and I feel like that's what that was for me this year. I've grown so much this year, in every level, spiritually, financially, personally, career, like everything. And I'm not the same person I was in January. And so I feel like 2025 was a movie of my life. Every day that I wake up and every month that I wake up, there would be certain challenges and certain things that I would have to achieve. You know, I have to choose between that red pill and that blue pill. And I, you wake up and you're like, oh, well, where am I? Like, is this really happening? Hurricane Melissa, just the exams I had to take this year, like there was always something that I needed to overcome, and I did it. And in the Matrix at the end, all the stuff is revealed, and I feel like going into 2026, that's what it is for me. I have all this revelation, and I see things more clearly, and like, oh yeah, I could see what 2026 is going to bring for me.
And it's wonderful that you brought that up, because my next question is, if 2026 had a trailer, what would that title be, or what would that look like?
Probably the prelude to The Matrix. There's a couple of different Matrix movies. So yeah. But I'm looking for the Bridgerton year. I'm looking for maybe 2027. But in 2026, I turned 50. So I'm looking forward to a couple of different movie titles. Eat, Love, Pray, Matrix, Bridgerton, somewhere in between there.
Yes, ladies and gentlemen, this is what 50 is supposed to look like.
I know that's right.
Period.
Okay, so I have two more fun ones. So what is your go-to comfort snack or food?
When you said comfort, my mind immediately went to like a dessert.
That's fine.
Yeah. But I would say comfort food, especially now because it's cold, something warm. So it doesn't have to be a dessert. It could literally be like a cup of coffee, a cup of tea, a cup of broth, um, chili, soup, just
Yeah.
something warm, not ice cream, not anything with ice cubes in it.
Yes.
Absolutely not. No one, don't serve me a cup with ice cubes when it's
She
cold.
don't do cold. She does not do cold. But just comfort snacks over, like you can eat over and over again, and just whenever you're feeling down or life gets heavy, or your pick me up snack, is mainly the comfort snack that I was looking for.
Yeah. That's when it's cold. Any other time of the year, I would have to say it's fruit. It's probably jackfruit, mango,
Okay.
tropical fruits. They make me feel like I'm at home.
Of course, of course. Awesome. And then last but not least, if you could teleport anywhere for 1 hour, where are we going?
We're going to the beach. That's so easy, honestly. It's the easiest question you've ever asked me. To the beach. Yes.
I have a feeling that you like water.
I love water and sand and the sun, which brings me to the beach.
Yes,
Yeah.
yes, yes, yes. She would get out of here from this cold and this
So,
freezing, and she would go
yeah,
somewhere where it's warm, where it's
hot, not
water.
warm,
It's hot.
hot. Yeah.
All right, awesome. All right, y'all. So that was her get to know Nicolette. She's wonderful. Most of you guys know her. So now next, I am going to go to her actual spotlight questions of the night, and then we're going to go on the people that are actually on live tonight. So
She had ice cream on Sunday.
huh? Oh, she sure did. Kind of fun.
I'm telling you, ice cream is a delicacy year round, honey.
Right, right. Let me see this. Where is her other one? Here it is. It's 8 minutes. But these are the actual questions. All right, guys. So we have Nicolette Namdali. She is our life insurance co-host. Hey, Nicolette, how you doing today?
Hey, everyone.
Yes. So anything for your life insurance needs or building and developing wealth through that platform, she is your go-to person. So Nicolette, we're gonna jump this right on off here with your spotlight. We know that you're doing big things out there tonight, but we're glad that we were able to have this recording with you so that we can still learn and get wonderful gems from you. So for your spotlight question, one of your spotlight questions tonight, I want to ask you if you could assign one book or author to represent the life insurance industry, who or what would that be?
Okay, I have to say, most recently, it would probably be What Would the Rockefellers Do? That kind of explains in a nutshell what I do on a day-to-day basis, especially with juvenile policies. I help families learn about legacy, but then also implement legacy using their minor children or actually children in the family. I have some clients that don't have children of their own, but they've implemented this legacy plan for their sister or their brother's children. Grandparents have implemented it to give their grandkids a leg up, because a lot of people are not aware that you can build legacy through life insurance. They just think it's for protection, and a lot of people put it off until they're adults. They really have no idea that you can get life insurance for children as soon as they're like 6 months old.
Okay. All right. Awesome. Awesome. Awesome answer. Y'all writing that down. Have your journals out now. All right. So next, what is a conversations that families avoid that life insurance quietly solves?
I think that answered itself. The conversation that people avoid is life insurance.
Mhm.
You have some people that jump right in. They want to be protected. They want to know everything. And you have people that are hesitant. It's so taboo to talk about death.
Mhm.
But as I have said in previous episodes, taxes and dying, two things that you can't avoid. So it's better to discuss these things when you're healthy, when the conversation isn't going to cause chaos, when you can determine who your benefactor is or how many benefactors you would have. So there's no arguing, and your assets don't really go to, probate. So I would say what solves it is actually having a conversation about your life insurance, the plans of your life insurance, how the beneficiary works. I make it a point to speak with beneficiaries to let them know why they were listed on a policy, why this is beneficial, and what the plans are in the future for this money, whether they're going to use it to also create legacy or if they're going to use it to take care of a child.
Okay. So with that, within that same realm, my next question for you that I'm sure a lot of people are interested in and need to learn about, can life insurance actually replace your income?
So that's an interesting question. Not necessarily the life insurance itself, as far as replacing the income. A lot of people don't use it for that, but the cash value inside the life insurance policy can give you basically more opportunities to take advantage of like once in a lifetime deals or once in a lifetime business opportunities or investment opportunities. It can allow you to have it as your emergency fund if, God forbid, something were to happen that you didn't have enough money. It also avoids the fact that you would need to go to a bank and ask them for a loan and wait for an approval or a denial. You'd be able to borrow from your own policy to do those things. But if you have a disability rider or income protector rider on your policy, then yes, that part of it can substitute part of your income, but not all of it.
Okay. Okay. Very good information to know. So, what gives people a false sense of financial security?
Not understanding.
Not
Not
understanding.
understanding. If I were to be soliciting, which I don't love to do, so I really don't do it. But I've seen other people do it, and I've seen people just walk by and say, no, no, thank you. No, thank you. I don't want that. You don't even know what I have. You have
Mhm.
no idea what I have. But no, I don't want to sign up for anything. I don't want to give you my name. I don't want to get, okay, well, ma'am, I have $1 million for you. Oh, so, I joke about that all the time
Yes.
because I think at one point I was one of those people, like, don't talk to me, you're soliciting me, but I've come to learn that I give people an opportunity, like, okay, what do you have to say? And I let them say it. And if it still doesn't spark an interest in me, well, thank you, for the knowledge. And if it does spark an interest in me and I want to know more, let me know more. But honestly, if people want to know, do I have to pay something up front? They should just ask. Because a lot of times they say no because they think you're going to rope them into something. They got to pay for something. This is going to cost them something. Financial information doesn't cost you anything. It's free,
Mhm.
100% free. And what we do is we try to guide you towards the proper choices, especially in life insurance. So people know term, they know whole life. They don't know universal life. They don't know variable universal life. They don't understand the differences between the riders on each policy or if there's a surrender period for anything. These are like deeper knowledge that people don't know. So when they go out there to make a decision on something, it's not so much an educated decision. It's just maybe what somebody told them, someone they were willing to listen to, maybe a family member or a friend or a podcast or a YouTube video, but never really in like real life when you're seeing someone. They will only talk to you once they've established a relationship with you. So when I'm meeting people for the first time, I don't talk about life insurance at all.
Mhm.
I ask them about themselves. I want to know about them and who they are. And if they want to know about me and what I do, then we will visit that.
That's really good. That's a good way to think. Okay, and last but not least, the $1 million question for tonight. How could the 50-year mortgage impact your industry?
Yeah, so the 50-year mortgage absolutely extends past a lot of the financial protections that's structured, especially mortgage protection. So mortgage protection typically goes up to 30 years. Most people only need it for about 20 because the last 10 years they're able to pay off. But this would definitely put a strain on the things that people had planned before. Retirement changes, your financial planning, if you're in your 20s and you buy a 50-year mortgage, you're now paying that mortgage till you're in your 70s. And so a lot of people have to take into consideration, even past retirement, I'd be paying for this mortgage, but I won't have protection on it. And so, as of right now, the insurance industry is not planning on having a 50-year term. It's kind of ridiculous, honestly, for someone to invest in a 50-year term when they can just get the knowledge to invest in a whole life policy and let that grow cash value and increase their death benefit while they're investing in it. So, I'm not so sure with the 50-year mortgages how people are taking that. Some people think it's a great idea if they're going to invest and flip properties and get the lower payments. But for people who plan to buy their first house and they take a 50-year mortgage and they're in there until retirement, they really have to look at the rest of their financial planning and make sure it aligns with that.
Sounds good. That's wonderful. All right.
Not sure you're on mute.
Hey guys, sorry, live from Sugarland.
Ooh, how pretty.
Hey,
Yeah,
Nikki.
full of lights. Thought I'd just pop in and show everybody what's going on.
Awesome.
Oh
Awesome.
yeah. We want to
Right.
be where you at the Festival of Lights. We got all your gems now. Now we get the
And I'm
beautiful
at
view.
where I thought I'm gonna be at.
That's right.
All right, y'all. So we're going to dive in. Next, we have Candace Gilbert. Candace Gilbert is our real estate and my real estate partner and bestie as well. So we're going to get to her spotlight questions. All right, Candace. So what is something, let me get over here. It said that. Okay. What is one thing that buyers do that instantly tells you this is going to be a long day?
My. Oh, there's so many. It could be so many.
Mhm.
I think the first thing, I mean, when you're in that initial consultation phase and you start talking to a buyer who's just trying to get a feel of, their affordability, the first thing they say, one of the first questions I asked of, have you communicated with a lender yet? And they're like, no, but I know how much I can afford. I Googled it, or Zillow told me how much down payment this is going to be estimated at, and just those are some of the things where it'd be like, okay, so what's your credit score? I don't know, but you know what, Credit Karma tells me that my Vantage score is this, and then we have to have an educational moment about your FICOs and your mortgage scores and the difference between that and your Vantage scores. So that tells me immediately that it might be a long day with this buyer. From a seller aspect, and that's just a few tips. I mean, I could go on and on. Y'all, especially Mike. Mike knows because he
Yeah.
hears these same things when I have to send the buyer over to them. But from a seller's aspect, I think that we hear a lot of, well, my home is valued at this because this is what my appraisal said. This is how much I'm paying on taxes, so I should be able to get at least this. Then you have to discuss the difference between an appraisal and what market value is. And really that, yeah, this is your beautiful gem to you. You've lived in this. This is your baby. You lived in this for 10, 20 plus years. And, you feel you put that brand new stove in here and somehow that could increase your equity of your house and, this, that, and the other. And you got to break it to them that it's not always, going to be that you're going to get top dollar for the house the way that you think. What else? Sellers or having the discussions about prepping your home. When you have a person coming to look at your home, the first impressions are the most important. And so making sure that they understand, I got to make my bed up in the morning when I'm going to have showings, expected today, or wash them dishes and, take that trash out, or put my dogs away. And you'd be surprised how many times I have to call clients and be like, hey, we got a showing schedule today. And, one just came in, oh, can we delay it? I need to run home and put my dog up. Like, okay, all right, well, it's a long day. And it's not that these people are bad or, or just not good clients. They're just misinformed when they try to rely on Zillow. And or Google, and just or the advice of friends, and that mama said, mama did this 20 years ago. Well, the market is not the same today as it was 20 years ago. And so it's just making sure they get that educational piece behind it. That's all. You still on mute, baby girl.
Good deal.
There you go.
More questions, and I know I want to make sure we still have enough time
For
for
everybody. Yeah. Yeah. So give me one more. Give me one more.
Okay, so let's see. Oh gosh, I have so many good ones for you though.
I just one. Just give me one.
Okay. What is a surprising thing that I'll save these other two for next time then? What's one surprising things buyers forget to budget for that always catches them off guard?
I think my number one thing for buyers is explaining and I explain these things off the top up front. I give them the expectations depending on what I know that they're moving forward with. I tell them about the appraisal because that's not always built into their closing costs. That's something that most title companies are going to ask for up front before we even get there. Is my opinion. Should it be? No, but these title companies are risking money that they're losing if the deal doesn't go through, and they have to end up, footing the bill for that. So I get why they would try to pass it on to the buyer. Preparing for the appraisal and inspection. These are things they're all like, oh, I need to start in earnest money. I know we've had that, understanding before, had that question before, but I can't stress that enough. You think that you don't have to put money down or pay anything until you get to the closing table, and that's just not so. To take the house off the market, you need to expect at least 1% of the total purchase price of the home. So I think those are things that they don't budget for upfront. They're like, oh, I have time. Let me find the house and I have time for my down payment. And that's not always so. Or down payment assistance is going to pay for my house. And that's not always so. So yes, those are a few things that I try to set that expectation up front.
All right, good gems. Those are really, really good, Candace. Thank you so much. So we're gonna go into your mini game, and then we're gonna go over to Reed. So your mini game is buyer move or buyer mistake.
Okay.
So I'm gonna pose a statement, and then you guys can get offline, or excuse me, off mute, and say the answer, or you can put it in chat. Buyer move or buyer mistake. So financing furniture before closing, buyer move or buyer mistake? Yeah,
Come on, tell it to me, people.
By a mistake.
definitely. Okay, go ahead, Candace.
That is correct. It is a big buyer mistake. Don't buy furniture before you close on that house. They're gonna pull your credit the day of or sometime a day or two before and gonna see that furniture that you just financed. Don't do that. Wait till after closing.
Okay, next, switching jobs during underwriting, buyer move or buyer mistake?
Buyer mistake.
Mike's like, yes.
Definitely talk to your lender before you do anything.
Yes.
To your lender before you make any purchases, any switches in your employment. It matters. And sometimes it's just unavoidable. So that's why Mike is like, if it's one of those situations, let's have the conversation. Because if you have something lined up, you have a promise letter. I mean, there's a whole bunch of things that have to be set in stone before. But if you have things like a promise letter, as long as you make your first paycheck, and correct me if I'm wrong on that, Mike, then it should be okay as long as it's in the same field, right? Same field of employment, a promise letter or paycheck before closing. We could kind of make it try to still make your closing happen.
So there's two different ways, right? If they're like going to a salary and we have a salary letter, we're good, right? The one mistake people will make even with that, and they get like a bonus structure, they get like they're getting overtime, right? Then that becomes an issue because if they switch jobs, even if it's in the same field, they may not get that overtime that they've been receiving. So that changes their income, and their debt to income could be way different than what they got approved for originally.
On the new job. And I think you should like kind of break that down even more, make sure they understand that. And he's talking about overtime or extra money that you've been making consistently on your previous job and
Mhm.
going into a new job. Well, you don't have that overtime and that stuff that you're banking on any longer. So it does decrease the income that you're getting.
Right.
So, that'll change your whole structure
Yeah.
of your deal that you're currently in, and you don't want that. So definitely communicate with your lender. Let your realtor know so we can make sure that the lender knows and he's getting all that handled before you switch employments. But yeah,
Yep.
that's good.
For sure, for sure. And then last but not least, using your gift funds without documentation. Buyer move or buyer mistake?
By mistake.
Mhm. Yeah, and so just for the sake of time, yes, that's correct. Gift funds meaning any transaction that is transferred from your mama, your brother, your cousin, sister, best friend, anybody that sends you finances to help finance your down payment. There's a process of getting bank statements from them to prove where it came from and this, that, and the other. So using it, I mean, you can't use it if you're going to use it as proof for your down payment. But obtaining it, I think the better way of posing that question is trying to borrow this money without going through the proper process of showing proof of where it came from is where it falls back on the lending side to try to, make the deal work. You can't just say, my mama gave me $1,000 and put it in your bank account.
Right.
There
And
is a process.
that's one of the big things is like talk to your lender, right? Your lender and your realtor are your best friends during this 30-day cycle, right? And it's like
Correct.
nothing goes through anybody else except them because we'll even see it on earnest money. I borrowed my
Yep.
mama's money to pay this earnest money. Well, guess what? Now we can't use that earnest money. You got to come up with that money again. That
Yep.
doesn't count. So
Yep.
again, it's just simple conversations and get educated throughout the process.
Good.
Okay, dokie. Thank you, Candace. Wonderful. All right, Reed. So Reed Pearson is up next. He is our financial advisor for the panel, as well as one of our co-hosts. Battery's about to die.
Hey, everyone.
Yes, sir. So we're going to go ahead and dive into your spotlight questions. So for your first question, what's one investing habit people think is safe, but it actually slows your long-term wealth?
I think that question kind of answers itself. So playing the safe route is going to slow your long-term wealth. And I guess I'll kind of explain. So the safe route is putting your money into a bank account, a savings account, earning very little interest. Um, in building long-term wealth, usually we're talking 10, 20, 30 years down the road. Sometimes you got to risk it for the biscuit a little bit. Playing all defense is not gonna, is not gonna get you down the football field. So taking some risks. We see opportunities and equities, obviously buying U.S. based and international stocks. In the next 5 years, that might seem risky, but over 10, 20, 30 years down the road, yes, Candace, risk it for the biscuit. That's where you see growth opportunity, and that's how you're able to get your money to work for you.
Okay, perfect. So your next one is, what's the most overlooked factor that determines someone's ability to retire comfortable?
Um, from my experience working with individuals, I would say probably the biggest factor is liquidity. That's often not not stressed enough. And I guess a lot of people in this room right here work in the real estate industry. So I think that's probably the easiest example to use is the long-term real estate investor. To a real estate investor, like music to their ears is the term 1031 exchange,
Mhm.
right? You buy a property, 100,000, sell it down the road, 200,000, 1031 it to the next, so on and so forth. Well, down the road, you got $1 million property and you might feel broke. And the reason you feel broke when you're ready to retire is because you got $1 million property, but you don't have cash coming in to cover your expenses. So how do we liquidate that property? I mean, obviously you can sell it, take a large tax hit, 900,000 in that scenario I just gave,
Mhm.
um, or we can look for other options. So considering liquidity factors along the way, ultimately is going to put you in the best position for success.
Perfect. Excellent. And then the last question for tonight is going to be, what financial move do people delay that ends up costing them the most?
Retirement, saving for retirement, putting something away for retirement. I always say it doesn't matter near as much how much you start with as when you start. Yeah, I've got clients in their 60s that never saved a penny and they're trying to figure everything out in a scramble last minute. Um, I could show a 20 something year old how to save $100 a month and they're going to, retire financially free. So just getting started for that, is gonna put you in a good position.
All right, all right. So we're gonna dive right into your mini game, and then we got Money Mike. All right, great job. Reed, you always drop some really good gems. We learn something new every single time. So everybody make sure y'all get y'all retirements together. And this is our financial advisor. So make sure you reach out to him. All of us give free consultations. So feel free to utilize that. Okay. So finance, true or false is your game. So just true or false. Paying off debt is always better than investing. True or false?
True.
Okay. All right, Reed.
All right. I'm sure a lot of people here are expecting the Dave Ramsey to come out of me. I would say false. The reason being is, for example, if I got a mortgage way back when from Mike at 2.5%, I am very happy with paying that interest. I'd much rather save the rest and invest into an index fund that's going to return me, 7 to 10% over time. That being said, if you have credit card debt that's building up 20, 25% interest, let's get that paid off first. I cannot, in my right mind, tell anybody that we can get those returns year after year in the stock market. So, high interest debt, absolutely, but there are certain debts where I'd be comfortable keeping on the table.
Okay, cool. Retirement contributions should stay the same every year. True or false?
False.
Okay, Reed.
So, was the question should?
Should.
Okay. So that answer will depend. So I meet with clients every year to do a review. It depends on the outcome of that review. If I did my job as a financial planner right from day one, it should stay the same every year. However, life happens, life changes. We introduce new people into our lives, new expenses into our lives. So realistically, it will change. But like I said, if you create a solid plan from day one and it stays the same throughout, it should stay the same. Likely it will not though.
Okay. And then one more, and I actually need to go back to Candace and then you for the quick for a very important question. But one more, your credit score has nothing to do with long-term wealth. True or false?
I'm in between.
Yeah, I'm curious about that one. Okay, Reed.
Wow, this is a very interesting question. Um, your credit score has nothing to do with wealth. Some of the wealthiest people I've ever met don't have a credit score.
Mm,
They've never taken a line of credit. Um, credit and a credit score is a representation of how good of a borrower you are. Wealth is the opposite. Wealth is a representation of what you build for yourself, not what you borrow from others. So, and plus, I mean, we know that especially in our young and dumb 20s and late teens, you have the opportunity to very much put yourself in a bind on the credit side. buying cars at a 20% interest rate and doing all these things, having, debt go to collections and all these things. It can, it can really impact you for 7 years, but you can definitely long term build some serious wealth, regardless of your credit situation.
That's good. That's really good,
That
Reed.
is good because I did not think of it like that. So my false statement was more of like if I'm doing very well wealth-wise, then I'm taking care of my credit. But I could see how they could not have anything to do with each other at all based on your response.
That's
Right.
good. That's really good. Look at us. Always learning something new, episode after episode.
Mhm.
So my question for you, Reed, before I go back to Candace, is the million-dollar question. How could this 50-year mortgage affect your industry?
So, in affecting my industry, um, I would say the investors are going to win at the end of the day if this goes through. Right now, it's this big hypothetical, a
Yeah.
50-year mortgage. But if I were to loan someone $300,000 today, and they're going to promise to pay me an amortized schedule 6% for 50 years, and
Mhm.
if they don't pay that loan, then I'm the one still winning. That's a win for me. So investors are going to win. Um, People who are investing for income and taxable accounts, MREITs, which are mortgage REITs, um, I think that they would, hold very strong, maintain sustainable value, and provide good tax advantaged income for them as well.
Okay. And Candace, same question. How could this 50-year mortgage affect your industry?
Well, because Money Mike is about to get on the mic, I don't want to tap too much into because we're both, I'm just an extension of what he does when it comes to the mortgage side. So, um, as a real estate agent, I think my personal opinion to the matter is that, all I can see is the cons to it. I know that there are pros when it comes to people getting to qualify, but when it comes to the cons, baby, I have to deal with your market value. When it come time you want to resell that house, and it's just a higher risk on the value of the property and you being under, it's like buying a car at one price and trying to go trade it in and a year later and you upside down. So, that and just the high interest rates, I just cannot get over it. For you willing to pay sometimes 4 times as much as your house is worth, I couldn't responsibly advise someone to move forward with that unless there was just no other option and you just don't want to rent no more and you just have to move forward with purchase and this is the only means that you are able to move forward with. Otherwise, I'm going to stick to the good old traditional 30-year mortgage plan. But that's me not tapping too much into Mike's toes because you got to talk about this too.
Right. And the thank you so much, Candace, because of course, the real estate side, that's where our mind goes. So that was really, really good. I wanted to get everybody's opinion about that. All right. Now the time we all been waiting for. We have Mike Mendiola, our loan officer and guest speaker, to tap right into this hypothetical situation, the 50-year mortgage debate here. So, welcome, Mike. We're so happy to have you here.
Thanks for having me.
Yes, absolutely. So, my first question for you is what's the biggest misunderstanding about long-term mortgages like the 50-year mortgage?
So when we talk about the 50-year mortgage, right, it's obviously has a lot of negative connotation that goes along with it. Again, when, you know, Nicolette tapped into this, Reed tapped into this, everything's about financial education, right? It's like getting into it. I look at this as it could be a possible tool for some people. It's not anything that I would advise anybody to go and get a 50-year mortgage. But again, there's going to be certain individuals that we can use it for in very short term, right? Use it as a very short term thing, flip it back to a 25-year mortgage,
Mhm.
let them use that tool to get there, but never advise anybody to be in something for more than the 30 years that we have, right? It's like, so I think that's one of the misconceptions. It's like in every little thing, you can use something as a tool. And this would just be an additional tool that we have in our tool bag to help somebody that may not be able to qualify regularly with a 30-year due to different circumstances that they may have.
Great. Perfect. Perfect. My next question is, with that being said, who would benefit the most from a longer term mortgage and who wouldn't benefit?
So when I look at that, and like it's a big if, right, that this thing comes to fruition.
Mhm.
But My thing would be a young buyer, a first time home buyer looking to get into their first home. They're tired of renting, they're trying to get in, and they can't qualify because of their debt to income ratios just right there on the fence. But they can qualify with a 50-year. They can't do it with a 30-year. Well, we know somebody that's, if they're young, they're gonna start making more income as they grow, right? So if we look at and we game plan for like a 2-year loan at a 50-year and then finance them back to a 25-year once they get that raise or they get that promotion, that's the game plan we want to use. We definitely don't want to use that same strategy with the 45, 50-year-old and say, hey, let's do this, because more than likely what they're making is what they're making, right? They're getting ready and planning for retirement, things that way. So the 50-year doesn't make sense. And explaining and educating to that 25-year-old, hey, this is the game plan. If you stick to this and you don't do what we say, then yeah, you're going to be 75 paying on this thing and you're going to pay 3 times, 4 times what it's worth. And that's not what we're trying to set up. So I think from our side and our perspective, we got to do a really good job of educating people on that. And then we got to understand who we're dealing with. And if we're setting up somebody for failure or if we're setting up somebody that can prosper from it.
Perfect, perfect. And then how does the 50-year mortgage change the way homeowners are able to build their equity over time?
On a 50-year, I look at it the opposite. It's going to eat their equity, right? So I would never advise anybody to stay in that mortgage. The goal and the game plan, just like we're doing now with people that are buying homes now, it's like, hey, you can buy a great price on a home. Don't get so caught up in the rate, because if rates do come down, we're going to refinance you, right? Same thing for that. It's like we don't advise you to keep this thing for 50 years, because you're going to be, any equity that you're going to build in real estate long term is going to get eaten up, and there's not going to be anything there. It's like, or the chances of it being anything there, right? If it's a $300,000 house and you're paying 800,000 by the end of it, it's not a good deal.
Good. That's really, really good. Okay. So, how might the housing market be affected if the 50-year mortgage became more common? Like, what would it do to the market?
So, we kind of go back to the affordability, right? Because it's gonna bring more buyers to the table. When they passed the 30-year mortgage, back in the day, the main thing was to bring more new construction into the fold to get more first-time home buyers. I think this is kind of that same goal, to try to make things more affordable, to get more builders to build more houses so that the prices of homes come down and then they can get in and they can buy. And so again, we go back to those first time home buyers, those young buyers, that this is where that would fit in, but it doesn't fit in with anybody, looking to buy their second or third home.
Okay. Okay, this is really, really good. And then last but not least that I have for you before we go to your mini game, is if one thing that buyers should compare side by side before choosing a 30, 40, or 50-year loan.
Yeah, I think the first thing you have to do is talk to your lender, get a fees worksheet that breaks down all the fees of what the loan costs, so they can see numbers next to each other, what the 30-year costs, what the interest rate is, the 40-year, the 50-year. You look at that, and then you make the best determination for your family. But then, ask a lot of questions. Why is it this much? Why is it this much here? How much am I saving here? Long term, if I'm going to save 150,000 by doing this makes more sense, right?
Okay. All right, perfect. So your game is called Approved or Denied. So anyone that's out there that haven't got a home yet or just kind of curious on what it takes to get approved or denied for your home, we have Money Mike on the line. And then these are some hypothetical statements, right? So the first one is you have a 640 credit score, 20% down, and a low debt to income ratio. Will you get approved or denied?
Approved.
All right, Mike.
Yeah, you have a high probability of being approved.
Perfect, perfect. The next one is your credit score is 720, but you have several different recent inquiries, approved or denied.
Inquiries?
Mhm.
Approved?
Still approved. Mike?
Yeah, so the inquiries affect your credit. When you have a lot of them, that's going to take a hit to your credit, right? So if you're at a 720 even with all those inquiries, it doesn't affect the mortgage process. We're looking at your credit score. The biggest things we're looking for is lates, collections, charge-offs, right? If you have a late on a mortgage, that's a big deal. If you have 6 inquiries and your credit score is at 720, we're moving on.
Okay, cool. Next one, your credit score is a 580, but you have a strong income and savings. Approved or denied?
Approved.
I don't know.
Depending
Yeah.
on the mortgage.
Well, how much savings you got? It depends.
All right, Mike.
All right, so that's an open-ended question. It's got a couple of different scenarios, right? The biggest thing is when you're at a 580, yes, you can get approved. But your debt to income ratio is going to be very tight and very low. So at a 580, the most that you can spend on a house is going to be 28% of whatever income that you're making. So if he's making $10,000 a month, his house can't be more than $2,800, right? So if his payment's $3,500, he's not going to get approved because the credit score affects it, right? So yes, it's possible with the right mortgage, but it does make things very strict.
Okay. So you have a 670 score. You have a high debt to income, and you're on this 50-year loan. Approved or denied?
With FHA, yes. If you have a high debt to income, because FHA can go to 56%. If it's higher than that, you're not going to get approved. But at a 670 on an FHA deal, you will, if you're under 56%, more than likely it's going to approve you.
Okay, perfect. So I have two more that I'm curious about. Your credit score is 700. You're self-employed, but you only have 6 months of work history that you can prove.
Denied.
Denied.
Mike?
So great, good job for the score, but you have to have 2 years history of being self-employed, and you have to have 2 full tax returns. Because it's like, hey, I'm making this, but we don't know what you're making. We have to use what you are sending to the IRS. So the biggest question when I have a self-employed person, when I got them on the phone, I can figure it out really quick what they're paying the IRS or what they're showing to the IRS. And I'm like, hey, I make $150,000 a year. I go, what did you pay the IRS in taxes last year? And they're like, well, I didn't pay, or I paid $1,000. I'm like, that means you claim like 20,000. So your income is 20,000. So you have to have 2 years and then 2 years of tax returns to show so we can average out what you made for those 2 years.
And I always wondered about that because people are like, tax write-off. I'm gonna write off as much as I can, and it makes their income at the end look really low. So with that being said, when it comes to if they're wanting to purchase a house, that can really affect, okay,
Yeah,
Their
and
buying power.
buying
yeah,
power.
it's huge, right? Because that's what, that's what they can use for income. So when you're self-employed, we use net income,
Okay.
right? That's the big one. It's net income that's on the IRA. Basically, it's if you have a Schedule C, it's line 31. Usually what that line says, that's what your income is. When you're W-2, we use your gross income of what, before taxes. So just if you're self-employed, it's always going to be your net.
Gotcha. And last but not least of those questions, your score is 750, but you have large unpaid medical bills. They're all in collections.
Approved.
Medical bills are a HIPAA violation on your credit score.
Maybe HIPAA, but it's not
Approved.
disqualifying for you to buy your house. You can buy that house with
So
the medical.
yes, approved, right?
Good credit.
Mike?
Yeah, if you're at a 750 and you got all these unpaid medical collections, it's not going to affect anything. On a conventional loan, one of the things they just rolled out like within the last 12 months is they got rid of that, especially for veterans and for FHA and government loans. If any of those medical things that we don't even have to even really look at them anymore, just bypass it. They don't even exist. It's just you take the hit on your credit.
Perfect. Thank
So
you, Mike.
Mike, is medical the only one that is one of the ones that's kind of bypassed?
Yeah, right now, there's I want to say there's another one. I can't remember off the top of my head, but I thought there's one other one out there that we can bypass. But medical is a big one that came down the pipe about 8 to 12 months ago.
Yes. Okay. Just trying to make sure I couldn't remember the other one either. And I know it's not like bankruptcy. Bankruptcy is after a certain amount of time,
Yeah,
then you can bypass it,
and
but
depending on the bankruptcy itself, right? Which one?
depending on it.
So
Okay, Mike. So, two things I'm going to ask you. What is one smart mortgage tip that you would give the people? And then also your question of the night for the people that are still standing, that held tight, that can win the prize for tonight.
Oh, okay. Yeah, one of the biggest things is a mortgage tip that I tell my people that are on the fence, that are afraid to pull the trigger. With home prices where they're at right now, it's, I keep saying it, it's a great time to buy, right? Even with the interest rates where they're at, because we are starting to see it trickle down. When I was looking at data yesterday morning, and I had a post that I did on social media from 1 year ago, from yesterday to now, right? It was We were at 7.125 on our rate. When I pulled rates yesterday, we were at 6.23. So
Wow.
even though it seems high, we've come down a whole percentage point, and we're trending that way. But what has happened is that home prices are steadily dropping. So you can get that house at a good price. And then if when rates keep trickling down and they get to 5.5, 5.75, you refinance it. And what we're doing for our customers is we're giving a free refinance. So it's not costing you anything. You're going to get that lower price down the road, and we're going to take care of you. And so now you've gotten used to paying this higher mortgage. Now you can put that more towards principal because you've adjusted your life if you can afford it, right? I think that's one of the things that I kind of give advice to people that are looking or are afraid to pull the trigger. Do it now because we may not see this window again for 10 to 15 years.
That's really, really good, Mike.
So
Jennifer did ask about student loans.
student loans, yeah, if you're defaulted on it and you're trying to do a government loan, it, you're not going to be able to do that loan, right? It's almost like a IRS tax lien, student loans and tax liens. If you're defaulted on that, that disqualifies you from getting a mortgage on a government loan. You'd have to go conventional, and then it's
Okay.
very hard to get approved on a conventional that way.
Okay, that's really, really good. All right.
I had a question for Mike on his last comment about the refinancing for free. Is there a cap on when your mortgage company is doing that, like a time frame on that? Is it
No,
like
it's
within the first 2 years or four
no,
years of your loan?
like
It's
we're
just
give
period.
yeah, we're giving it to you. You get one on us. And
Oh,
like I've even told some people that bought last year at 7.25.
yeah.
They've come back and they're like, "Hey, can I use it if it hits like 6%?" I'm like, "Absolutely." And then if you want to refinance after that, you can, because you can
I pay for
refinance
it
every
though.
6 months, right? It's like
Yeah,
now that one will be on you, but the first one will be
right.
on us.
That is so amazing. I think
Yeah,
people really need to understand what a gem that is, because I mean, just throw out a number on what the average, refinance costs are for us, Mike, but just so they can understand the gravity of, yes, buy in now. I think I,
hmm
I mentioned that in our last podcast. The idea of these interest rates being through the roof and people being hesitant to pull the trigger on buying a house right now.
yeah,
It should be the other way around. The fact that the interest rates are high, that means that the price point of the homes are lower, so get in now where you can go in later and be able to refinance. But you guys are sweetening the deal by doing that refinance for free. It's like no risk to you. Yeah, the only thing is you're paying a little bit higher now, but I would rather pay a little bit higher now than buy a house next year when the rates are lower, but the house is overinflated in value.
right.
You
And
know,
that's what's going to happen, right? We get into
exactly.
those fives. Um, and once we get into those fives, my applications are coming through like a lot every day, right? We're still getting a ton of applications, and all these people are sitting, and I know what they're waiting on. They're waiting for that 5.99, 5.75. When that happens, all these people are going to be jumping on the same houses that other people are. So then that
Yeah.
creates a bidding war. It creates
Mhm.
people start marking their houses back up and
Yep.
then it's going to slowly start moving to the seller's market. And so that window is going to be gone. And we're going to be in that window for a little while because we do expect rates to kind of trickle down and kind of hold steady in those fives to maybe high fours at some point.
That's good. I just had to reiterate that because that's really good that your company is offering that, and it's no time limit. I've seen
Yeah.
it being offered before, but the fact that there isn't a time constraint to it, like, oh, you have to refinance within your first 2 years, or that's been a popular one, especially with builders. They're like, oh,
Yeah.
with our preferred lender, we'll do this, and you get to refinance on us the first time, but you have to refinance within your first 2 years. Well, what if rates aren't where I want them to be in the next 2 years?
You basically lose
So
it.
exactly. So that's
And
really good.
one thing that we're doing differently, which is a big deal, right? Because like some people advertise that, hey, we're doing a free refinance. That's just waiving the lender fees. So our lender
Mhm.
fees can vary anywhere from $15 to $2,000, right? We're covering all the title fees, right? So now we're talking $5,000 to $7,000 on average.
Mhm.
Because
Come
what
on.
happens is they take that extra that 5 or 7,000 to refinance and they just roll it into your loan. So now you're paying interest over the 30 years on that loan, right? We're
Mhm,
not
mhm.
giving you that. We're going to take it and completely cover it. And so now you're having a true payment. And if we need to refinance you at 25 years, and make it just a better loan all the way around, it's a great deal, and it's different than what other people are doing.
Awesome. That's amazing. Guys, this is really good information. If you want to contact Mike, he's with Responsive Mortgage. He'll give out his information as well. But like I said, all of us do free consultations and quotes and things of that sort, so we can get you taken care of. So before we close for tonight, thank you guys so much for sticking through with us. We have one question to see who is going to win the prize tonight.
All right, you guys ready?
Mhm.
What year did the 30-year mortgage come out and who was the president?
Can we Google?
Yeah.
Oh,
Yeah.
somebody has to cheat. Mm-mm.
Was it Nixon? Oh no.
Yeah, that was my guess too.
No.
Okay, Jennifer put 1985 Ronald Reagan.
No, that'll be 30 years ago. No, 40 years ago. Wow, I'm getting old.
Yeah, that's
Yeah.
my character. Mm.
Yeah.
All right. I Google, but I'm not gonna win this. So I want the guest to answer right before I see what I say what I found.
I'm curious too.
Hmm. Come on, some takers. Y'all better bust out that Google. We know y'all not history buffs on the housing market.
All right, at this point, y'all go ahead and look it up, and whoever put it in there fastest
Yeah.
will get the prize.
Come on, Liv. Come on, Jennifer. Y'all
Yeah,
got this.
come on.
I'm pulling up two different answers, three different answers.
Yeah,
But I'm gonna go with the
it's
first
got
one.
a couple of different answers that can be
Mhm.
confusing, right? So
Franklin D.
Okay.
Roosevelt.
that's one.
Is that one answer? That's not the right answer.
Well, yeah, what year?
According to Franklin Roosevelt, it was from 33 to 45.
Well, that's when he was president.
Oh, that's when he was
Is it
president.
1948?
No. It's that is kind of like when it kind of went mainstream and they offered it to the VA.
Mhm.
And but when it was actually introduced,
Was it
1930s?
1930?
1938?
close, getting warmer.
Jennifer
God
put
dang it.
the
So
Great
was Google wrong?
chapter here.
Okay, was it 1934?
Yes.
Okay.
So it was 1934, Franklin Roosevelt, right, introduced it as part of his New Deal,
Mhm.
right? It was under the
The New
Federal
Deal.
Housing Act that instituted it. And
Mhm.
so in
Mhm.
1948, that after World War II, it started becoming more mainstream because they started offering it to the veterans with the GI Bill. And then by 1954, it was super mainstream, right? But before that, people don't realize that to get a mortgage before this new deal came out, they had to put 50% down, and it was a 3 to 5 year note. And then it was a balloon payment, right?
Wow.
So we moved to that 30 years. So it had a lot of positive reception when it came out, and it helped first time home buyers, it helped the housing industry. So there was a lot of positives to it, much different than how we're getting this information on the 50 year, right? But when
Mhm.
you fast forward, a lot of people still think that it was done in the 70s and the 80s, but it was actually right after the Great Depression or during the Great Depression.
Perfect.
Mhm.
All right, so the winner is Liv. So Liv, if
Yay.
you send your information over to Mike, so that he can give you your virtual gift card.
Yeah, congratulations. So get me your info,
Awesome.
and we have a $50 Amazon gift card for you.
Look,
Woo-hoo.
Check me
Come
out.
on, check
How
you
do
out,
I
girl.
send it? How I send the information?
so much, friend. All right, so that concludes it. We were going to do a virtual vision board, but because of time, we want to respect everybody's time. And I know people have to get up early in the morning for work, but we will be back here January. It will be back to the end of the month every Tuesday. I had it pulled up. I want to say January 23rd or 28th. I believe it's the 23rd. But I'll have it on there and we'll have a new topic. So thank you so much. Enjoy your holiday, your new year, and we will see you guys next year for episode 7. Y'all have a good night. Mike, I'm gonna keep you on the side so Candace and I can chit
Yeah.
chat.
And if anybody wants to hit me up, go to mikedoesmortgages.com and set up a time with me.
Yes. All right. Good
Thank you.
night.
Thank you, everybody. Y'all have a good one. Merry Christmas.
Happy holidays, everyone. All right. Let me take
We just got Reed. Hey, Reed.
Erika, stick around if you want to. I just wanted to
Sorry,
off.
I messed up your ending recording. My bad. That was good. Oh, that was some really good questions and really good answers, y'all.
Thank you.
Yeah. Thank you guys. I appreciate you guys having me on.
Thank you. Thank you
Yeah.
so much.
Mike,
I
you know I'm
just
be
sent
calling you, man, because that free refi is amazing.
yeah,
Yeah. But basically, everybody we've closed for the last year and a half, like we're watching it, we're getting phone calls on it. And I'm like, yeah, it's not time yet. Like but we're getting there, you know.
Yeah. Yeah, it's still a good tool. If there's no timeline on it, that's a phenomenal tool on any
Yeah.
30-year mortgage. 52 at this point, because you want to be able to refi and get out of that. And you kind of changed my perspective on it a little bit because I was so not for the 50-year mortgage whatsoever. So
Yeah, I
it's
think
good
it
that it's
has,
not a
you got to
long-term plan.
use it. It can be a tool, right? And just like in anything, right? You can use a tool, but I would never advise anybody, hey, um, stick to this 50-year mortgage. The danger that I see in it is the less educated, lower income people that can get taken advantage of.
Right.
So that is my big drawback, especially being a minority, is like, hey, is this
Mhm.
kind of like something that, and I'm not going to say this online, but is this something that can basically attack the African